Hi everyone, this is a technical analysis on your USD. Let's start with some fundamental background first. In the US, the Fed left interest rates unchanged as expected at the last meeting, while dropping the tightening bias in the statement and adding a slight pushback against the March rate cut. The US CPI recently beat expectations for the second consecutive month, with the disinflationary trend reversing. The US PPI beat expectations across the board by a big margin. The US initial claims beat expectations while continuing claims missed. Overall, the data remains steady though. The ISM manufacturing PMI surprised to the upside, with the new orders index, which is considered as a leading indicator, jumping back into expansion. Similarly, the ISM services PMI beat expectations across the board, with the employment subindex erasing the prior drop and prices paid jumping above 60. The US retail sales missed expectations across the board, and the market now expects the first rate cut in June. In Eurozone, the ECB left interest rates unchanged as expected at the last meeting, maintaining the usual data-dependent language. The recent Eurozone CPI came in line with expectations, with the disinflationary process continuing steady. The labor market remains historically tight, with the unemployment rate hovering at record lows. The Eurozone PMIs beat expectations on the manufacturing side, but missed on the services one, with both measures remaining in contraction. The ECB members recently have been pushing back against the aggressive rate cuts expectations, placing more weight on wage growth and data dependency. The market expects the ECB to cut rates in April. Now, on the daily chart, we can see that Euro USD bounced from this key support around the 107 handle and rallied all the way back to the red 21 moving average. This is where we can expect the sellers to step in, as they also have the trend line for confluence. The buyers, on the other hand, will want to see the price breaking higher to invalidate the bearish setup and start targeting the 110 handle. On the 4-hour chart, we can see that we have a strong resistance zone here around the 108 handle, where we can find the confluence with the trend line, the previous swing high, the 50% Fibonacci retracement level, and the daily red 21 moving average. Moreover, we can see that at the moment we have this upward trend line defining the current short-term uptrend. The buyers are likely to lean on the trend line and the 21 moving average to position for a breakout of the major trend line with a better risk to reward setup. The sellers, on the other hand, will want to see the price breaking lower to increase the bearish bets into new lows. On the 1-hour chart, we can see that this latest leg higher diverged with the MACD, which is generally a sign of weakening momentum, often followed by pullbacks or reversals. In this case, it might be another bearish confluence for the sellers. The buyers will need the price to break decisively above the 108 resistance zone to invalidate the bearish setup and turn the trend around. This week is basically empty on the data front, with just the release of the FOMC meeting minutes tomorrow, followed by the Eurozone and the US PMIs and the US jobless claims on Thursday.